Okay, it's about 1 o'clock Eastern time for zone. So let me go ahead and hop on here and double check everything, make sure things are logged in correctly, that I'm showing up here on the screen, which is fantastic. And it looks like the slideshow is here ready to go as well. So welcome everyone to a live webinar. As you notice, I'm not your normal host. Ty is actually out during the week where he is meeting up with his master group, going through things for preparing for this coming year of 2021. So he asked me, my name's Lane McGleston. I've been working with Ty here for, way too many years, I guess. Hey, Angelo, welcome aboard. And he asked me to go ahead and run today's webinar that's dealing with tips to run a credible business. I think, and I actually feel kind of honored that Ty asked me to run this particular webinar. Before I get into too much in depth regarding on what, from my experience and what we have in the slideshow, I just wanted to share a little history regarding my experiences when it comes to businesses. When I was first out of college, I graduated and I got a job with Enterprise Rent-A-Car. And after 7 years with Enterprise Rent-A-Car, I was at a point where I was literally pulling my hair out. And I'm like, I can't take this anymore. I need more freedom. I need some uh, more excitement in my life than working in the loss control department dealing with car rentals. Not that Enterprise is bad. I think they're a phenomenal company. It just didn't fit me. I realized that deep down I was more of an entrepreneur at heart. So I decided, hey, I'm going to hop out of Enterprise and I'm going to go start my own deal. So I went out and started a company dealing with personal credit. And I came across working with individuals working in business credit. Eventually, my path led down all the way to dealing with Ty Crandall, working on business credit as well. During that time frame in the last few years, I kind of counted up, my wife and I had started, I think, 7 different businesses, anything from Amazon sales for setting up an actual distributor account with Amazon, through a couple of MLM companies dealing with Seven and Isogenics. My wife went and did Pampered Chef for a while. And then eventually, through our experience, since we're older now, we came down with a couple of different companies where my wife actually runs a pretty successful daycare company. And I'm working with Ty Crandall because I love the industry of business credit. I've had some ups and downs through the years. So I've learned a few things on how and what to do and how to prevent having issues when it comes to running a credible business and what to expect overall. I also did real estate back in 2007 and 2008, and I call it expensive tuition because I learned a lot, but we got back into real estate recently as well. But we learned from our prior experiences. So my wife and I are doing things differently. But that's my experience when it comes to the whole gambit of businesses. Today, we're going to be going through a lot of the foundation of important things in running a business and setting up a business and making sure it looks and operates correctly. Let me see on if I can pause for a moment. It looks like they're okay. Just had to enter something out on my computer. Hopefully I turned off my phone and my instant messages and everything else so I'm not distracted here as we go through this information. So over here on the slideshow, there we go. There's Ty Crandall's information, as many of you know, and then we're going to hop right in here on how to run a credible business. Let me pause that as it pulls up here the first slide. Just to give you an overview of kind of what we're going to be going is the first steps is talking about the foundation on overall what a business should look like. And then we're going to get into importance of having a solid business plan, as well as the importance of understanding how to read financial statements, and then even the importance of being able to hire great people. But initially, when it comes to running a credible business, it all comes down to the foundation. Oftentimes I get questions from individuals where they ask, what they need to do. And I give them an example of saying, imagine if you're buying or building a house. If you're building a house, there's a lot of aspects that go into a house before a house can stand sturdy through the test of time. And it all starts off with a strong foundation. So setting up a business, it's no different. You have to think of how to set up that strong foundation first, and then you build the walls, then you build the roof, then you build all the other interior aspects. But if your foundation is weak, then unfortunately, the business might collapse or have issues here in the future. So some of the points that we have down on here is there's more to running a business than a lot of people realize. Now, one thing that question-wise that you have to ask yourself is that if you have that entrepreneurial spirit, like I've had and my wife have, that you would rather be running a business than this is the type of industry to be in. But if you feel more comfortable of knowing, hey, if I go bankrupt or if I go out of business, what are you going to do tomorrow? My answer would be the only thing I could think of is I would start a new business. I would do something new. I would create some other aspect. The thought of going back and working in a cubicle at Enterprise actually terrifies me. I would have a tough time doing that. So there's a lot that goes into running it. Not everyone knows all these different aspects, but you want to make sure that your business is set up here correct. So then that way it's here for the years to come. Other aspects that come into it, as I mentioned briefly, is making sure you have importance of like a solid business plan, making sure that you're understanding financials, hiring people. And then when it comes down to it, after all of those aspects are done, it all comes down to being able to fund your business funding. Because with that funding, that's the driving force to be able to help your business be able to succeed and grow through that working capital. Now, what makes the difference of setting up that foundation? So starting up here with that initial steps overall. Oftentimes with the many business owners that I talk to through the day and through the weeks, people will ask me, what's the most important structure to use? Which is a very important question. Most business owners I notice start off with a sole proprietor. And for those who don't know, there's a way that you can be a sole proprietor, which basically means that you are saying that you're going to do business personally. Now, with a sole proprietor, it all falls on your shoulders. It isn't a way to be able to separate that information. Usually your taxes are on the same form. So in that way, it all follows on your shoulders. In comparison, that if you're filing an LLC or a business corporation, S Corp or C Corp, those particular structures have the ability to actually stand on their own. So it can be an actual asset providing you funding, providing you revenue, providing you the ability to grow, but it's an actual product that you can turn around and sell in the future, where unfortunately a sole proprietor doesn't fall under that same kind of category. Now, since we're not an attorney and we're not an attorney here at Credit Suite, we have to give out that little legal disclaimer that the best thing to do when it comes to the type of structure is if you do have an attorney or if you have a professional CPA, to ask them the differences between LLC or a corporation when it comes to tax purposes overall. When it comes to building business credit or on a foundation, honestly, either's are great. LLC or corporation, either are able to build business credit and be able to set up on its own foundation as you go through that process. Sole proprietor can get you so far, but honestly, if you're really planning to do it in the long haul, then make sure that you make that jump to the next steps. And I actually think in the next slide, it might actually give more of that information. So I might even be getting a little ahead of myself, but let's see what it pulls up here. When my wife and I, with our different businesses, we originally started as a sole proprietor. When it came to running the MLM companies, oh, sorry about that. Let me hop back there. When we came to running the MLM companies that we had, being a part of it, we just had everything on to our shoulders personally. But as we grew and understood more, then we broke out and actually filed LLCs and corporations for our real estate transactions, as well as for the daycare, just for that protection. So a lot of the pieces of this puzzle that need to be put in place when you're coming in and running a business should be set up. The first one we're going to talk about is just the basics on a foundation. So this is the most important to make sure that your business is set apart from others, and then it has the ability to stand. Business credit will allow you to access funding, and it won't affect your personal side. It will also allow you to access business funding, which will affect your personal side. It just depends on the type of funding that you're trying to get established overall. The business credit will open doors to funding options that will allow you to run and grow your business more effectively and efficiently. Now, the type of funding, which we can get in a little bit here in the future, is there's two main funding options that you look at least that I compare them to, is there's funding and credit that can be established with your personal guarantee, and then there's funding that can be established without your personal guarantee. As the government gets more involved in everyday lives, and as businesses, I think, tend to struggle, and as they have these partnerships with banks and funding, we've noticed that a number of banks want to tie in your personal credit, just depending on the strength of the company. But there are options that are out there that you can actually go to based on the strength of your company and your business credit, or on your past revenues that lenders are out and being available. In most cases, when it comes to startup companies, it is a little bit more difficult because even the majority of credit cards are still going to ask for it, but there are funding options that are available that you can go through. So now let's talk about the fundable side. Now, if you've been following Ty, or if you're new to Credit Suite, a lot of these items you've probably heard before, which is good to be able to hear this information over and over again, because then you can recognize the importance of having these foundation steps. So part of that foundation of your house, or part of that foundation of your business, is you want to make sure that you have your own contact information, that the business has its own separate phone number, its own address, its own email. So that way the company looks credible when it comes through that process overall. As the business has that foundation, then it's able to build upon it. After you have the contact information, the next two items is your EIN number, as well as filing with the Secretary of State, which I think is actually on the next file coming here. Now, oftentimes, is there a way to get your EIN number without the Social Security number? And unfortunately, at this point, I'm not aware of that process. When you're filing with the federal government, they're still going to know who the business owner is, and it's attached to that information. But later on, you can build up credit with just using that EIN number. So those are the first two. Make sure you have your contact information, your EIN number, and then on this next slide, it's going to tell the importance of incorporating. And I think this is where I kind of let the cat out of the bag, where it says, hey, we need to make sure you have your attorneys or talk to a professional. There it is. Yeah, talk to an attorney or a tax professional to determine what type of corporate organization works best for your need. Reason why is the tax code is so huge. It's important to talk to the representatives that will best fit what type of tax benefits to the structure. I don't know that. I have an accountant myself, and when I went to do the filing, he recommended that my wife file for an LLC, but under my type of business structure, he said that a corporation would be better just for the long-term tax purposes. So we figured, let's pay the expert and Basin, and we've been happy ever since. So jumping back up at the top of the list, make sure you have your contact information, EIN number, then file with the LLC as corporate. And then for that purpose of separating your business from you as the owner, and truly it really doesn't matter when it comes to which one you choose when it comes to building business credit. But when it comes to the aspects of going through the process of tax purposes, then it can come really into play. After that, the next thing we want to make sure on the foundation is we want to make sure that you have a proper business checking account established. I've had a number of questions asked where individuals that I come across with business consulting, working with Ty Crandall, they ask, is there a way to establish a business checking account without the Social Security number? And unfortunately, at this point, we haven't found But a business checking account will look at your paperwork from the Secretary of State, as well as your EIN number and your contact information, and then you will establish a business checking account. The reason why this is important is through the years, the date, there's two real dates that your company can rely on if someone asks you when you started your business. There's the filing with the Secretary of State, which will give you an actual time stamp of saying your company started on this official date. Now, in the past, that's what most lenders looked at. Most lenders would look at the Secretary of State and they would say, oh, your company has been established for 5 years, 10 years, 2 years, whatever the Secretary of State states. Now, through the past 10, 15 years, with different ups and down swings, the banks have become more sophisticated, and I guess they've been more cautious on mitigating their risk. So for an example, prior to 2008, 2007, where there was a great financial kind of crash when it came to real estate and other markets, prior, there were lenders who would lend to businesses that as long as they were established for 2 years and they had good credit, they would give you a business loan regardless of revenue. That doesn't exist anymore. Now the lenders, rather than looking at just specifically the date that your company was established, what they'll want to do is they'll look at your business checking account. So they'll look at when your business checking account was established, and based on the revenue that's going through your checking account to determine how viable that business is. So when I have people come up, there's a common question asked, is it viable to buy a shelf corporation? I know I'm going a little off tangent here, but I'm going a little quick reading anyway, so I might as well go off a tangent if Ty's given me the opportunity. So people will come and ask, hey, is a shelf corporation viable? Is it a good way? Unfortunately, I've noticed recently that even if you bought a shelf corporation that said you were 100 years old, which on paper looks fantastic, you've been around forever, and you go to a lender's going to look and say, well, let me see your bank account. And unfortunately, the bank account would still be brand new, so they would just consider you a new entity. So keep that in mind if you're considering how to set up your structure. If you're looking at a shelf corporation, you might consider just setting up a new one and understanding that it's just going to take time. So the other number of reasons why it's important to run your business more efficiently, let's go establish your business in a separate entity. The business banking account helps you keep your business finances separate from your personal finances for tax purposes. You don't want to be caught in commingling funds between the different amounts. This brings up an important part. People ask, is it possible that your business could lend or you personally lend to your business? You can. You just want to make sure the proper documentation is shown so you can lend yourself and pay your a loan back and forth between your businesses. Just make sure that it's properly recorded. Also, many lenders will want to see the business bank account with that minimum average balance. So that goes back to what a lender is looking for. Oftentimes, I've noticed when it comes to business lending and business funding, you have to kind of put your hat on and think like a lender, because a lender wants to mitigate their risk. They simply want to go through the process of determining what is going to give them the best overall reaction and funding and payback. So they're just mitigating your risk, so they're going through these aspects. Another thing to consider is to be able to set up a credit card payment or a merchant account. They're also going to be looking at that foundation. So studies have shown that customers that are likely more to use a credit card than pay in cash. So as a business, you want to make sure you have that set up as an option for them to be able to accept that payment. Last part of this part, before we get on to a little bit about the fundability, is many lenders consider the date the business account was open as the true start of business, as I mentioned earlier, which is just quite important to recognize that they've changed through the years. They still look at when you have listed on the Secretary of State to make sure that that's in compliance. But more importantly is they're looking at when you actually started generating revenue. that you're more than just a hobby, I think is what they kind of consider it. Other some final words regarding on setting up that business fundability is you want to make sure you have your licenses and your certificates set up based on what type of business you have. This is kind of this requires more research, I should say, because it all depends on what type of business you have and your state. Certain businesses are required to have licenses or certifications to be able to operate within their certain state. Some of the obvious ones that people are aware of is if you are a CPA or say you're a doctor or you're an attorney, you have to get an approved license to be able to fulfill those roles. Other type of businesses don't require licenses. Oh gosh, my mind might blank. I'm trying to think of one. Door-to-door sales. Let's say door-to-door sales. Well, I'm sure they have some other, licenses as an attorney in comparison to a license on just operating your business. Now, there are licenses that are important if you're an occupational license and you have people coming to your establishment. So what we do is recommend here that you contact your local city government offices to confirm what type of licenses are required or needed. I'm trying to think if there's specific places to go online. Honestly, the hardest part is just having to do that research, calling your local government office or even the state to be able to confirm specifically for yours. Consulting just in general, as an example, doesn't require licenses, but if you are going to do financial services, then it would do. Moving on to the next step over here is talking about the importance of a website. This is also an interesting thing that has changed through the years. In the past, a website that I've seen through my years of operating businesses and even working with Credit Suite is a website wasn't as important as it is currently. Reason being is just in the modern technology day that we live in, people want to be able to see, including lenders, people want to be able to see that if a business is in business, that they've put the effort involved to establish a professional business website. Does it have to be super fancy? No. Does it have to look like that it looks in a way professional? Yes. The great thing is that technology is kind of caught up where there's so many resources online to be able to help you accomplish this. And because there's more resources, the costs of producing websites I've seen have dramatically decreased. Where in the past, if 10 years ago, you might be paying 10 to 20 plus thousand to be able to go through it. Now there's so many resources on here where you can go through and even establish really professional looking websites, at a lower cost. So in fact, often in this day of age, if you do not have a website, according to people's thought process, you don't exist. However, a poorly put together website is just as bad if you didn't have one exist. So definitely put the time and effort and look and set up a properly designed website and make sure your email address, contact information is all set up there as well, and that you have a proper look. Avoid the free email services like Yahoo and Gmail and Hotmail. Just when it comes down to making sure you look professional, they want to be able to see your domain name in there as well. Let's see if that pulls up. Oh, jump right back on there. Jumping into beyond the fundability stages, there's information in here regarding on the importance of being able to have a credible looking business plan. Now, initially on just starting your business, you don't necessarily have to have a business plan just to start operating and hiring or marketing, selling your product. But when you do present yourself in front of a lender will want to be able to see what the plan the business has set. So they'll want to be able to see that you've actually put the effort in here. So here are a couple of options. You can hire a business plan writer, or you can do it yourself. With the internet nowadays, there's a lot of helpful resources that are out there to help you go through that. Or you can look within your immediate group of individuals who are around you. There might be individuals who have done it before, and you can kind of ask for a mentor to help through that process. through the business plan, you want to make sure there's also, oh yeah, this is a helpful hint, is if you go up to the Small Business Administration, there's actually helpful hints that they have specifically on that website. Let me see if we've got that website here. Let me pop one more. I think we have it in here. Maybe it just hasn't come up here yet, but, oh, there it is. There's the link for the SBA on a business guide plan for your business. Definitely check out this information if you haven't already set it up, or you can look through kind of your soft market people who are around you who might be able to provide this. This provides all that necessary information. It's kind of broken down into 4 different steps when you have your overall business plan. First, you want to just make sure you introduce yourself. So in that way, you know who they're looking at. Then you want to be able to have a resource section. I wanted to pause before going to the next slide, so that way it gives you an opportunity to look at that link to be able to jot it down. The third item on a business plan is you want to make sure you have your financial information. Now, if you're a startup company, you can put your projected numbers on there. So that way you're basically projecting what you're seeing to be able to do in the future. If you have been in business for a while, you can include your profit and loss statements, and you can include your other financial statements based on that information. And then lastly, you want to include, well, it's kind of an optional if you want to include an appendix with any additional information on the specifics. When my wife and I were doing real estate and we were looking for lending options, part of our appendix on our business plan was including past real estate transactions and deals that we did. So that way it would show the lender that not only are we coming with our profit and loss statement and what our current snapshot of financials were, we wanted to be able to also show here are past examples of what we've done. So then that way they can see our history in that specific business. Now, after you have your business plan established, you have to understand that for any plan to work, you need to execute and work that plan as you go. If you don't execute and work that plan, then basically the plan is simply there, but it's not going to accomplish itself. So some of those recommendations is lenders want to see when you're getting funding. You also want to work that plan. It also will help you provide guidance that you'll need through that operation or moving forward. And if you have a great business plan, you won't have to guess on what you need to do. You just need to follow through, and that plan will basically guide you through that process. After you have that business plan, other recommendations in here that are kind of vital to running a business come into funding. So after the foundation is set up and you have it looking correct and operating correct, oh, jump the gun, let me hit back one. The last part that most business owners are looking for are vital funding options. So these business funding options then can be presented based on what has been established in the past. So lenders like to see the foundation that each role plays in helping them. Again, a lender is just trying to mitigate their risk. They just want to be able to think and say, if we lend this business money, what is the chances of us not getting paid? And that's what they're trying to do, is mitigate their risk. So it's still hard to get funding without having credit lines in the first place. So here are some tips on how to establish some initial history, especially if you're a startup company. Because oftentimes if you're a startup company, a business loan currently we've seen, they're looking at least a minimum of 12-month bank statements or even 2-year financials, tax returns. So you're in this dilemma of what do you do for the first 2 years before your actual revenue can prove that your business is viable and working. So a couple of those helpful hints, we'll jump right back in here to, is a credit line hybrid. There's a way, regardless of your business credit history, that you can piggyback off of good personal credit history. And as you piggyback off of personal credit history, you can establish business credit cards. Oh, this slideshow is getting on me here. Sorry about that. Boom. So there's ways to piggyback off of that good personal credit history to establish business credit cards. And this could be for brand new startup companies. The particular product that a Credit Suite has, we call it the Credit Line Hybrid. It doesn't mean you need collateral, but it does mean that you have to have decent personal credit, including some other requirements. A quick list of these requirements is typically we've seen credit scores of around 690 or higher, utilization or balances on your credit card around 30% or less, not too many inquiries, but you also want to have good personal credit history. So they're looking for credit cards that have been established for at least 3 to 4 years, or if you have mortgages or car loans on there. So unfortunately, if you're an 18-year-old starting a company and you don't have any credit history, yeah, the chances of this program working, unfortunately, aren't there. Or if you happen to not fit those criteria, the other recommendation is to see if you have a credit partner, maybe someone who's willing to apply on behalf of the company. Since this credit is in your business name, when the payments are reported to the business credit reporting agencies, it helps your business credit history get stronger. The other benefit is because they're reporting on the business credit side, it doesn't affect the personal credit beyond the initial inquiry, which is cool. So even if you had these cards maxed out, and you used everything on it, it's not going to affect your personal credit scores because they're not reporting back on the personal credit side. The other common quick way to help on some initial funding options and credit history is with vendor accounts. Now, again, if you've been following Credit Suite or have been watching our videos, this is one of the main things we offer here is our Business Credit Builder program. It's basically a way for you to establish vendors that are going to report back to the business credit histories to be able to start that history. These vendors will extend net terms on invoices and they'll report your time on your good payment histories. So examples is like Quill and Uline, Home Depot, Staples, all of these type of products or companies you can establish to purchase products, and that will help build up your overall business credit report and history and establish part of that greater foundation. We have a myriad of information on this particular product, so if you haven't had an opportunity or if you're new to Credit Suite, please definitely visit us at creditsuite.com. And if you copy down that link here at the bottom about an e-webinar, will actually teach you more about even 7 initial vendors that you can go through. If you haven't had a chance to watch that overall webinar that Ty's done, it's available as a playback through our YouTube station or even on our main website. After you have these last few items that I have on here have to deal more beyond funding or the foundation. These are the other helpful hints when it comes to making sure you have an important business. So returning back to the original reason of this webinar, which is helpful hints of being able to run a credible business. These are other helpful hints that I've come across through my different experiences. My wife has come across this one particular more. She currently has 17 employees that are working in her daycare overall. I've noticed through my experience, it's usually me or 1 or 2 other people who are running in my business. But it's really important to be able to hire the right employee because they will, in a way, can make or break a good business. So your business is only as good as people that are working there. One of these days, I want to do a webinar specifically on what I call is the principles of prosperity. So I did some research in the past, and I came across a number of principles that if you live your life by principles, what takes place is you'll have greater value or success. One of the principles that I look at is called people are assets. Now, this is the same when it comes to hiring a good employees. You have to look at it that the employees you have working for you are, in a way, your number 1 asset because they represent the company, how it's going to perform, and how it's going to be able to succeed. I think on this next step, I have a little note here to tell you a recent article I read about Elon Musk and Tesla about how to hire employees. So I hope that pops up here, and so I can remind myself to tell you about this little article that I read. So these employees, they're their first impressions for customers and for your clients, and they also need to know what they're doing and how to treat customers. So that definitely is important. Some of the things that you want to look for is you want to look in the right place. So you want to look on specialty boards on where to find them. There's a number of sites online that you can post to be able to determine where to find these employees. There's even ones that are designed specifically for those who are looking for posts in that specialty. I haven't personally have to hire too many people. My wife's gone through quite a few, and I know Ty through his resources have, but don't neglect looking at the employees that you already have to see where you can pour benefits from them. On a recent masterclass that I was watching, what is it, Sarah Blakely, who is the CEO and starter of Spanx. She said that you want to spend your time. She spend plenty of time hiring people. She said, spend more time hiring people. And she said, be quick to fire, spend tons of time hiring. She goes, it will make a bigger difference in your overall. Other things to consider that are important are also the background check and references, making sure that you go through the proper steps. Don't stop just with the background check. You want to make sure you do your own research. Nowadays, it's so important, and be aware, especially if you're trying to apply for work, check your social media sites and accounts. I know with anyone who comes to Credit Suite who looks for a job, our HR department entire, they look through all the social media sites. They look through to see what type of candidate or person's out there. So you want to make sure that not only are you presenting yourself appropriately, but understand that employers are doing the same thing. Also ask important questions. Okay, this is the one that reminded me here regarding on Tesla. So recently, Elon was asked a question. They asked, how do you find good employees? And his response, he said during an interview, he asks the same question on every interview. And they asked, well, why do you ask this specific question? He asks many. He goes, but he always asks the same question. And he says, I want to determine if the person is lying or not. So the follow-up questions they asked him, they said, well, how can you tell? How can you tell if someone's lying? And he said, this is what I ask him. He says, I ask him, tell me about a situation in your life where you've either failed or that you've had a great conflict take place, and tell me what you did to resolve that failure or that conflict. And they asked, well, why do you ask that question? He said, if the person responds too quickly or they just tell you about this general product, he goes, more than likely they're not telling you the full truth. He says, if the person gets into the details and they start telling you specifics of what they did to resolve that issue and what they did to get out of that conflict, he said, those are people who have actually gone through the issues and they're telling you the truth. He goes, that's what I want to determine from my employees. He goes, everything else can be taught to them and they can learn and they can grow. He goes, I just want to be able to have truthful employees who are working for me. So keep that in mind when you're asking questions. Keep them open-ended, and then you'll have a better idea to help through that process. The last step when it comes, well, I think this is the last item we have listed in this slideshow to be able to run a successful business or be prepared, is understanding the importance of financials. Now, the reason why this is important is because the details are in the numbers. You want to be able to look at your numbers and be able to have a response to understand how strong your company is based on those numbers. Here, I think I have one more bullet point that should be pulling up. Oh, there it is. You need at least a basic understanding of financial statements to run a credible business. You don't have to be an accountant. That's one of the great things. Even if you should have an accountant, you should at least be able to get a gist of what the numbers are telling you. So a tip is compare numbers between months, between quarters, between years to be able to have a better idea what's taking place. It's kind of a way to take a temperature of your company. Because if there are dramatic changes from one period to the next that can't be explained, then you definitely need to investigate that information. If you don't have an accountant or if you don't have an individual who's specifically looking at these numbers, make sure you take the time to understand a few so that way you can watch what's taking place. A couple of helpful items or ratios to be aware of. There's three. The first one is what we call is the current ratio. The second is called a quick ratio. And then the third is debt to worth ratio. And we're going to go through each one so you have a better idea of what these numbers are. These are just indicators for you to see how your company is doing overall. Sorry, I had to take a little drink there for a moment. So the first one is called the current ratio. This is a way to just get a quick snapshot to be able to see what your total assets are based on your liabilities. And for those who are new, either to the concepts, an asset, as Robert Kiyosaki says, is basically something in your business that's bringing you money. And a liability is simply something that is taking money or money is leaving. So you want to be able to compare these two. So assets could be rent, or it could be the sales. It could be generating residual income or subscriptions, anything that's bringing you additional money in comparison to a liability, which might be your cost of your location, utility bills, advertising. That's where it's leaving. So a current ratio, to help you understand, is basically taking that total assets, dividing it by your total liabilities. So the example right here is if you have a total assets of the 20,000 set as actual equity, but you owe 10,000, you're able to turn around and see what that ratio is. So your business in this particular situation would have twice as much in their assets as it does in comparison to the debt. The next ratio here is a quick ratio. A quick ratio is basically a way for you to take, it's kind of similar to the current ratio, where except it reduces the total assets by the total inventory. Oh, hop back in here. So same kind of concept. What you do is you want to take that, this is similar to the current ratio, except that it reduces your total assets by the total inventory. This is because you can't turn inventory into cash immediately. If something happens and you need all the cash you can get from your assets right now, inventory would not be part of that. So a healthy number to base that on would even be 1. And then the last one, which I think more people are familiar with, is the debt to worth ratio. So this is basically taking what your company is overall worth based on the overall debt. I'm sure many of you have been aware because it's been in the news, but I've been loving the recent news and experiences that's been happening with the case study that will be studied in years to the future with GameStop. GameStop last week, for those who haven't been aware, has done things that have been beyond amazing when it comes to the stock market or businesses. But deep down, the details are in the numbers. So ultimately, if you turn around and you look at it, you ask yourself the question, what is the true value of GameStop, or what is the true value based on any company? So you want to look at the amount of debt worth ratio. So this is calculated based on your total liabilities divided by the net worth. So the net worth is simply totaling up your assets minus your total liabilities. This ratio tells you if the and lenders how much you owe versus how much you own. But it's amazing how things can totally switch around. Now, the next is just a sum up regarding the different information over on here onto recap. So in the end, when it comes to a credible business, you want to make sure that you have the fundability, and you want to make sure you have things set up here correctly. Let me actually let this go all the way through. And then what I'll do in the last 10 minutes or so is run through some of the comments and answer questions that have been coming in here. about this particular product. So the bottom line is you cannot run a credible business without funding. You cannot pay employees if you don't have funding. Business plan is necessary for almost all funding options, and you can't get full access to all those funding availabilities to your business without business credit. And you cannot build business credit if your business isn't set up properly. And then lastly, once you have the funding you need, you'll be able to understand the financials, continue to run that overall business. Just as a recap of some of those fundability aspects, making sure that you have, and this is just a quick review, is running a credible business includes a lot of those things, the fundability aspects, the business plan, making sure you have access to the funding. And I think this is the last page here, going through options are credit line hybrid or vendor accounts. And lastly, pay good employees once you find them, which also is necessary to run credible business. Lastly, understanding what happens with your financials so you can make the best decisions possible. Perfect. Let me see if I can hop back in over here. Awesome. So that's the majority of, well, actually, that is all the information that Ty and that we had set up here on running a credible business. I do like to take a moment here and I'll run through some of these comments in here and let's see if they had questions. No, good suggestion on if there's a way on being able to review these notes. I think Ty does have plans on being able to provide these as a way to review the information in the future. If you want, feel free to even send me an email. You can jot down my email. This particular copy I can email out here directly to you. My email, it's my first name, Lane. So pretty short, pretty easy, Lane, L-A-N-E, at creditsuite.com. So Lane at creditsuite.com. So if you want a copy of today's specific webinar, feel free to send me an email and I can get that over here as an attachment. Hey, Jeff. Sorry about that. I'll resend out the email over here to you, Jeff. Thanks for attending. I know you had a question regarding on that, that lending option. Regarding to see if we had something. From what I recall, I asked Suzanne to respond out to you and I forwarded on her email that she said, what I recall is unfortunately, I don't think currently in our wheelhouse with your specific funding request that we had something available. So I apologize, maybe my email got lost in spam or junk, but I think on that specific scenario, I don't think we had something that was available. Let's see if there was other question. General contractors, let me see if I can see what it says. What about general contractors? General contractors, I think this has to refer back to what type of business structure you have set up here overall. With a general contractor, I've seen that it's still important. If you're operating under a sole proprietor, as a general contractor, you're still going to fall under those rules. As a general contractor, we would still recommend getting an LLC or a corporation to be able to keep that liability. And it is giving you the opportunity to build up a business structure. Even if you are a general contractor and have subs that work underneath you, you can still follow that basic foundation and guidelines to make sure that you have a credible business. Let's see. Authorized users. How does a business authorized user trade line help? That's a great question on a vendor account. Oftentimes, well, let me step back a little here. For those, just a little history is personal credit and business credit have similarities, but business credit and personal credit have differences. Oftentimes in the industry of personal credit, what you have the ability to do is add on an authorized user, which would help boost your credit score. So the strategy is if you have low history or you don't have a lot of history, you can go in and you can add on an authorized user, and what you'll see the effects is your score will increase. When it comes to business credit, unfortunately, it's a little different. Both Dun & Bradstreet and Corporate Experian, they look at it differently than a personal credit aspect. And the concern is Dun & Bradstreet and Experian, if they see that authorized users are being added onto a business credit account, usually they'll red flag your account. So we actually don't recommend doing authorized users on business credit building for that very reason, because it can cause issues and get red flagged with the credit bureaus later on. I know there's companies out there that provide that service. We recommend just building it from the ground up in a traditional sense, which means, for an example, going out, applying for a Staples account with your business information and foundation, using the account with Staples, getting an invoice, paying off the invoice, and then they'll report back to the credit bureau. It does take more time, but that process is organically building up your business credit, and then the chances of any being red flagged or having issues are very minimal because you're basically following the steps. So that's how an authorized user is out there. Yeah, be very cautious. The same as I would say about when it comes to shelf corporations, be very cautious. There can be benefits, but you need to just weigh both of them. Let me scroll right down here. What business website necessary in order to obtain vendor credit? Great question. It's not in many of the cases. In many of the cases with a vendor, they don't require it. If you have it, it does help be able in that application process, but it is not initial requirement for a vendor account. So you can often get a vendor account established without a professional looking website. When it comes to lending, that's different. If you're getting to the point where if you're going in front of a bank and you're trying to get a business loan, then yes, you want to have a professional looking website, absolutely, because they'll definitely check. You'll also want to make sure you have a social media site set up, even if through a Facebook, or even if you have some form of LinkedIn, something that's connected to your business through social media, so you can see that greater connection of your business overall. But that is a great question regarding on the difference on a vendor account in comparison to specifically like a lender. Let's see if I can scroll through here to the last. It looks like that might have been the last question on there. So I guess the tidbits that I have of running a successful business is someone told me earlier on, my dad actually didn't recommend it. He said, just get a good job, just stay with corporate America, follow that process. And I came across Rich Dad, Poor Dad by Robert Kiyosaki. And I read that and I said, oh, this is the answer I've been looking to. And that's when I quit Enterprise Rent-A-Car and went off and started doing my other things. But in the entrepreneurial spirit, I have noticed that based on my experiences, let's say out of 10, if you have 10 great ideas that you think are great ideas, usually 1 or 2 will be successful. Usually 1 or 2 will be complete failures, and the rest will probably come out even. And with my different experiences, when it comes to business credit, it's been successful. My wife's daycare's been successful. A lot of our businesses that we did, we just kind of broke even. Any of the MLM companies, product services, that type of aspect, we still made money. Even our Amazon business, we still made money, but honestly, we just kind of broke even. And then we had a couple of huge failures, which now when I look back, I'm like, hey, I couldn't have done things differently, but we had some real estate failures where we lost real estate back in 2007, 2008. But the way I look at it is I actually, if anyone asks, have I ever gone through a nervous breakdown, it would be 2008. And I was at this point where I thought, oh, I am a failure. I totally failed. My dad was right. And I was a little, I was a little down upon myself. And then someone came to me and they said, wait a minute, you only fail if you didn't learn. And I'm like, and they asked, did you learn a lot? And I said, oh, I learned more these last 2 years than I've ever learned in my life. And he said, good. Then all you have to do is look at it as expensive tuition. And I looked at him like, well, that was $1 million of expensive tuition. So now I look at it differently, but I've learned differently and we're back in the game and doing fantastic. So thank you all for attending and coming. Oh, I think there's a couple extra slides here that Ty wanted me to throw out here, but I think it has his picture on it. We'll put them up there. Thanks for attending. Thanks for being a follower of Credit Suite. If you have any questions, feel free to reach out to us at creditsuite.com or even through our email at info@creditsuite.com, or feel free to jot down our number and give us a call. But we sure do appreciate your following and appreciation. Thanks, guys. Have a great day and a great week.